Okay, update on precious metals here, gold, silver, and the miners. This is the morning of March 18th. So this is a couple days after the Fed meeting, the March Fed meeting, where they raised rates 25 basis points. A lot of people expecting gold to bottom around when the rate hikes begin. But as always, we're going to focus here on the charts. And so you can see that we have our swing low here. That was on day 33, which is actually right in the timing band for when gold generally prints its daily cycle low. And again, the swing low means we went above the high of the candle that marks the low. So I'll say that again. We went above the high of the candle that marks the low. What is the candle that marks the low? This one here, right? The one that was printed on March 16th. The high for that candle is 1929.53. So as long as we stay above 1929.53, we have a swing low in place. As you can see, this candle today actually poked down into that level, but we've recovered. You can see this lower wick again means there was a rally on a lower time frame. This is a daily chart. So, there was a rally on like the 15-minute hourly chart, etc. And the other thing to notice is, so this is your daily cycle low, day 33. This would be day 1. This would be day 2. Notice we have not gone below the low of day 1, right? Like in the advancing phase of a cycle, you would not expect to break the previous day's low. And so we really want to stay above 1923, right? Because not only would that break the swing low, but it would also give us a new low on the daily and suggest maybe this wasn't a DCL and or this is not going to be a very bullish cycle. Because that's the other thing. We're now looking for when can we expect a daily cycle high? Is it going to come early? Noticing that this cycle, the high came on day 27. That is incredibly bullish. That means we rallied for 27 trading days. So now the question is, how many trading days do we rally in this cycle before we roll over? That's what we're watching for. But again, today is just a swing. Today is just an inside day so far. So again, we haven't broken the low of the previous day, and we also haven't broken the high. So until you break one of those levels, so 1949.77 to the upside, you're kind of in no man's land. But I wouldn't say that this is necessarily bearish. It's a slow start to the cycle, to be sure. And then I'll look at the weekly chart really quickly. This is what would be potentially really concerning. This huge upper wick, and then you have a weekly swing high. So below the low of the candle that marks the high forms a swing low. So this is a weekly chart. So this is a weekly swing low. So this candle here, the low is 1958.84. So as long as we stay below that level, we have a weekly swing high in place, which is more important than your daily levels, since the higher the time frame is, the more control it has over the trend. So that is a really important level that we need to recapture, call it 1959. And I'll flip over to silver, which is in a very similar situation. So focusing on the daily cycle for starters, it does look like we have a low here on day 29, right? So we do have a swing low in place, just like gold. And again, to reiterate that this is the candle that marks the low. And so you have a swing low once you're above the high of that candle. The high of this candle is 25.10. So as long as we stay above 25.10, we have a daily swing low in place and reason to believe that we have a new daily cycle that has just started. In silver's case, just like gold, this would be day 2. Just like gold, again zooming in, this is an inside day. Hasn't broken the high, hasn't broken the low. And so those are the levels that we want to look for. And also notice this is your 10-day moving average, where we did not manage to get above it yesterday. And we really want to see this close above that, just as a signal that we are making more forward progress. Now, obviously, that would also mean we're making new daily highs. But think of this as like a secondary a secondary kind of criteria that you're looking for. So things are more neutral than anything, but there are very clear levels to watch. You really want to watch that 2510 level in silver and that, call it 1929 level in gold. Oh, and we'll quickly look at the silver chart for the weekly is same thing as gold. We have a swing high, and that's something that we need to conquer. For silver, you can see we've rallied quite a bit, so we're like almost at that level of the swing high. So that's very promising. I think both of these look bullish over the next couple months. And if we look at GDX, same deal, right? Again, same exact concept. This is the candle that marks the low. So that's your potential daily cycle low on day 31. Our top was day 26. So a very bullish cycle. We rallied for 26 days. And then the decline was only 4 days, and it wasn't even that bad, right? We came down, we had this lower high here, this high lower than this high, came down again. But maybe it's not over, right? This is definitely an inauspicious candle. This is a potential reversal candle. We'll have to see. But this is actually a little bit further along in its daily cycle. The open today on Friday, March 18th, would actually be day 3 because this is day 1. This is your last day of the previous cycle. So that's where we stand.